From ongoing implementation of prior tax laws to the major upcoming changes in 2018, 2017 promises to be another challenging tax year. Here's what you need to know. 3 popular tax breaks expired in 2016. Unless Congress acts to extend these tax provisions, you'll not be able to use these tax breaks. Tuition and fees deduction. This $4,000 deduction to help reduce the cost of schooling is now extinct. Fortunately, there are still other options to reduce the sting of high educational costs. Mortgage insurance premiums. The cost to insure your mortgage is no longer a valid itemized deduction. This may impact the amount of your taxable income in 2017. Mortgage debt forgiveness. 2016 marked the last year qualified debt forgiveness on a home mortgage would not be added back to your income. There's some exceptions, so if this impacts you, consider a quick review of your situation. What does this mean for you? Review last year's tax return to see if these expired deductions will impact your tax obligation this year. Remember, if you have a tax return with an earned income tax credit or an additional child tax credit, don't hold your breath for an early refund. The IRS is legally required to hold any refund with these credits until after February 15th of 2018. Next up is earlier W-2 and 1099 reporting. All W-2s, most 1099s, and health insurance form 1095s should be in the mail on or before January 31st. This earlier reporting requirement, introduced last year, is helping reduce identity tax fraud. Consider creating a checklist and marking these forms off as they arrive. The recently announced medical expense deduction threshold is now 7.5% for everyone. In order to deduct qualified medical expenses, you will need these expenses to exceed 7.5% of your adjusted gross income. This recent rollback is part of the new Tax Act, enacted in late December of 2017. Here are some other reminders. You will need to remember to take required minimum distributions from your retirement account if you're age 70 and a half or older. You may wish to make some last-minute contributions to qualified retirement accounts like an IRA. Consider any last-minute moves to reduce your tax liability for this year or next. This includes possible charitable donations, sale of assets to harvest any losses, and proper tracking of mileage for business, charity, and medical use. Finally, if you receive an IRS 1040 PIN notice, save it. You're in the Identity Theft Program and will need this one-time use code to file your tax return. So, start collecting your documents and get ready to have your 2017 tax filing go as smooth as possible. If you have any questions regarding your current tax situation, don't hesitate to contact us.